Today, crypto prices plummet ahead of another round of interest rate hikes. The DOJ prepares a new network to take down crypto crime. And South Korean officials reportedly want international help in tracking down Terra co-founder Do Kwon. Welcome to CNBC's Crypto World. I'm Kate Rooney. Crypto markets facing another day of steep losses to start the week. As of noon Eastern, Bitcoin traded just above $19,000. Ether tumbled to $1,300 and Cardano slid to about 45 cents. Crypto markets and Wall Street are both bracing for the Federal Reserve to announce another interest rate hike on Wednesday. Of course, investors are also eager to hear Fed Chair Jay Powell's comments after that announcement and whether the central bank will continue its aggressive pace of rate hikes. Okay, let's talk about the top stories. First, for a long time, investors have been looking for insight into how the U.S. will crack down on crypto crime, and now they're getting just that. The Justice Department on Friday announced that more than 150 federal prosecutors across the U.S. will be assigned to a new unit aimed at curbing crime in the industry. U.S. officials say the goal of what's called the Digital Asset Coordinator Network is to designate experts in the U.S. attorneys' offices to handle the sophisticated technical and legal complexities presented in crypto cases. Attorney General Merrick Garland stressed the importance of working with different government agencies to, quote, prevent and disrupt the exploitation of these technologies to facilitate crime and undermine our national security. The announcement came the same day as the Biden White House released its regulatory framework for crypto. These latest regulatory developments could be the clarity investors and particularly institutional investors have been waiting for, but they still need to be put into action. Next, speaking of regulation, both the SEC and Ripple are looking for a swift end to the lawsuit over XRP. On Friday, the two parties asked the federal judge overseeing the case to rule whether Ripple violated securities laws in its issuance of the XRP token. As a refresher, the SEC sued Ripple and two of its executives back in December of 2020, claiming that the company raised more than $1 billion by selling XRP, which was an unregistered security. Ripple denies that claim, and this lawsuit is just one example of the SEC's attempts to regulate the crypto industry through court rulings, but this particular case is an important one. If the judge does rule that XRP is a security, it could mean many other cryptocurrencies are as well, and therefore fall under the oversight of the SEC. And last, South Korean prosecutors allege Do Kwon is refusing to cooperate with an investigation into the collapse of Luna and Terra USD, so they're asking for help from international authorities. The Financial Times reports that South Korean officials asked Interpol to add Do Kwon to the Red Notice list and to revoke his passport. The move means law enforcement around the world could get involved with his arrest. Last week, a South Korean court issued an arrest warrant for the Terraform co-founder and 5 others for violating the country's capital markets laws. For his part, Do Kwon says he isn't on the run. In a Saturday tweet, Kwon wrote that he has been, quote, in full cooperation with any government agency that has shown interest in speaking with him, and stressed that we don't have anything to hide. The next day, he took to Twitter again, writing that he looks forward to clarifying the truth over the next few months. All right, for our main story of the day, we're going to focus on this latest sell-off. As we mentioned at the top of the show, investors are bracing for the Fed to raise interest rates on Wednesday. At the same time, post-merge volatility continues to hit Ether prices. For more on the state of crypto markets and what could drive the rally, fellow host Jordan Smith spoke to Shaikh, CEO of Aptos.
We saw some pretty lackluster trading over the weekend, and of course, we have the sell-off today. How much of the declines are post-merge weakness, and how much of it's tied to the Fed's rate announcement coming on Wednesday?
Yeah, it's a great question, Jordan. We've seen a pretty monumental change take place for the Ethereum network, and as that change is settling in, I think you're starting to see a lot of the market figuring out, how to react. And volume may have moved a bit based on just the proof of work to proof of stake transition with the merge, and there's this entire backdrop of macro that you alluded to. It's hard to discern between the two right now because there's a lot of noise, and the 2 points kind of conflate with one another. But one thing to pay attention to is the total activity across addresses on the Ethereum network. They have not changed much. Which is an interesting point to keep in mind. Given the volume of average active addresses remaining flat, I think you can start to point back to the market again, just trying to make sense of what is happening with uh, how developers are going to respond to the merge, and you know a lot of folks were pretty excited about the transition to using much less energy, 99.9% less energy relative to the proof of work state. The thing is, the speed of the network still remains the same. The performance of the network of Ethereum still remains the same. So, developers are trying to understand, where Ethereum will go from here. The macro still lends itself well to paying attention to not only Ethereum but other alternative asset classes within the crypto space.
I want to pivot back to the Fed and the macro environment for just a moment. And
Sure.
most experts expect another 75 basis point increase from the Fed on Wednesday. But I think there will also be a lot of attention as to Powell's stance on the economy and how they expect more rate hikes ahead in his speech on Wednesday. How should we expect crypto prices or investors to react if Powell continues this aggressive stance that he's been on for so long? And do you think that the pessimism around the economy is already priced in for crypto?
I think crypto is certainly one asset class among many, as an alternative asset class relative to what's happening in the broader macro. And you will see, again, sophisticated investors, folks that take a multi-asset strategy approach, diversify away to different assets that provide their clients their strategies, the resiliency in their portfolios, and potentially continue to seek the alpha that they need. um, you know, Folks that have embraced crypto will have a leg up. There are firms that have kind of put crypto as a diversifying tool in their portfolio, and we think those tools are valuable. I come from BlackRock, where that's sophisticated portfolio construction is mandatory when it comes to portfolio resiliency. And when you think about firms that don't embrace crypto as an alternative asset class against what may happen in the macro, they may continue to face challenges in terms of where to deploy capital or how to effectively rebalance their portfolios.
So I want to end by taking a positive angle for a moment. I mean, unemployment remains low. Biden just last night said that he views the pandemic as over. Are there any positive catalysts for crypto in the near term? Or is there something that investors should be paying attention to that they aren't right now?
Yeah, so there's a few points there, and I'll try to hit on all of them. Yeah, there are a couple of positive points that are worth paying attention to. Again, proof of stake networks have been exciting given the energy efficiency, but they're also exciting because they provide much more better throughput, more reliable infrastructure, and security in a way that other networks may not be able to provide. And as there are investors excited about where it's technological innovation continues to be a catalyst for growth for their portfolios. I think crypto and Web3 is certainly an asset class to continue to pay attention to. Proof of stake networks are on the cutting edge, and there'll be more coming out later this year, which we think will be a positive catalyst for the industry. The reason it's a positive catalyst for the industry is, you've seen large companies, large institutions get very excited about Web3, but then take a little bit of a side line approach because the performance is just not there to cater to billions of users. Proof of stake networks provide that. When it comes to President Biden's perspective, you could certainly look at the executive order as a potential positive catalyst to end on as well, right? A lot of folks have taken a perspective of, well, regulation could potentially be interesting in a negative way, but it can also certainly be positive. And if you look at some of the points that the executive order calls for, whether it's protecting U.S. consumers, investors, and businesses, whether it's trying to mitigate illicit financial and security issues, and then also promoting equitable access and affordable financial services, Web3 creates solutions for all of those components. And some of these proof of stake networks are really well suited to basically solve for a lot of the president's executive orders. points that they're paying attention to. So, we're pretty bullish on, the opportunity that Web3 brings for solving a lot of these components, and certainly going to be a very interesting Q4 ahead of us.
Okay, that's all for Crypto World today, but we'll be back again tomorrow with a lot more. We'll see you then.